Hey everybody, welcome to MOgul Mastermind. I am going to be delivering our Vancouver market update. Oh, excuse me. Now, for everybody that's in Vancouver, you know how hot it is. So if you guys are hearing a weird whooshing sound in the background, it's because there's literally an air conditioner right here pointed directly at me, blowing icy cold air on me right now because it is hot. Now, one thing I want you guys to think about is we're all real estate investors, and one of the most powerful ways to build as a real estate investor is to let people know you're a real estate investor. It's very, very hard to stumble across your next opportunity. It's very tricky to build your network. It's very tricky to attract a deal. It's very tricky to attract a potential joint venture partner if people don't know that you do real estate. So first thing I'd recommend doing is following MOgul on Facebook and Instagram. We're at MOgulRG. If someone could put that in the chat. And then when you guys are making your social media stories, brag about the fact that you're spending a beautiful summer eve learning about real estate investing. You guys can be doing lots of stuff right now, and you're bettering yourselves, you're bettering your career. So give yourself a pat on the back for that and be proud of it. Be proud of the fact that you're out there doing the kinds of things that most people are unwilling to do to get yourself further ahead in your real estate world and to be a business of real estate investing. So big shout out to everybody for that. Now, we're going to talk about, and then make sure you tag us in the stories and stuff. We'll if you guys tag us, we'll shout out and share your story on our story as well. So we'll give you some of that love back. Yeah. Now I'm going to keep it brief because we have so many awesome speakers tonight. And as a quick aside, I was just looking out my window, and those planes, the snowbirds, the Canadian jet fighters that fly in formation, they literally just went right past my window. It was, I don't know what's going on out there. They must be practicing for an air show, but that was a distracting moment. Anyways, we are going to get into, talking about the Vancouver market. It's going to be short and sweet. Yeah, thanks for the shout out, Steve. I thought the fighter jets were pretty cool too. My inner 8-year-old thought it was really neat. So we're going to just talk about super high level. We know that the Canadian government and the mortgage lenders are trying to slow the market down because we are getting into a phase of super crazy inflation. So you probably are seeing articles just like this. You need to make an extra $18,000 to pass the mortgage stress test. Well, what does that even mean? What does that even mean? It means two things. The first thing it means is if the going mortgage rate is 4.5%, they're going to run your approval at 6.5%. They're going to add 2% onto your approval. Now, that makes it a little bit trickier to get approved for a mortgage, which means that people's buying power is going down. Instead of affording $1 million place, they're affording a $875,000 place. The other thing that's starting to creep up on people is the variable rate mortgages could hit what's called a trigger rate. So when you have a variable rate mortgage, for those of you that have variable rates, you might actually be noticing that what's happening is your payments haven't changed even though interest rates have gone up. But if you have a payment of $1,000 a month, when interest rates were super duper low, like we're talking, sub 2%, you might have been paying $500 a month in principal, $500 in interest. As soon as you hit a threshold where the bank is like, okay, there just isn't enough principal to pay in a month, you're going to notice our payments going up. And a lot of mortgages are just on the cusp of hitting that trigger rate. So we're going to see people's payments start to go up, which again is going to create more caution in the marketplace as people have to pay a little bit more towards their mortgages. So that is a thing that's going on. Let's have a look. This is readily available information. So I want to give you guys an analysis of what this means. So we're seeing people's buying power going down, which, surprise, surprise, is having the desired effect of slowing down the market. Sales to active listing ratio, this is a very, very important stat, which is another term for absorption rate. It means how many properties get sold for how many are listed. Well, we're seeing that only 23% of houses are getting listed, which means 1 in 5 houses that are listed are getting sold. That's a really big deal. It's a big deal for buyers because it means that you have more selection and more time to put in aggressive offers. And for sellers, it means that that if there's 5 houses in your condo complex, if there's 5 houses in your neighborhood, only one of them is going to sell this month. And so you have to be bold with your pricing strategy in order to be one of the people that sells. So that's a huge piece of information. And we can see that in the actual sales volume. Last year in 2021, in the month of June, 37 houses sold in the greater Vancouver area. June of 2022, only 2,400 houses sold. So a lot of you might be in that wait and see mindset, and a lot of this is what waiting and seeing looks like. So the market is in the process of finding its new normal. This happened at the beginning of COVID, where we saw at the beginning of COVID, people were like, oh my God, supply chain might fall apart and the world could end. So I'm just going to wait and see for a few months to see what happens. So March was slow, April was slow, May was slow. And then all of a sudden in June of 2020, it was like we had 3 months of buying all happen in 1 month. So it's going to be a similar kind of game of cat and mouse where people are going to pause, the market's going to slow, we're going to wait and see. And then all of a sudden it's going to hit this equilibrium point where people are like, okay, this is the new reality. The market has kind of reached a balancing point. Things have cooled, maybe even cooled off a little bit more than the government expected. They're going to start easing up on interest rates. And then all of a sudden people are going to say, okay, I wanted to buy in June, but I was going to wait and see. And now I'm liking the way that the things are looking here in October, November. So I'm in. So we're going to see like this slow buildup of buying pressure because people don't want to not buy. They just want to wait and see. And that's a very important key distinction. They're not wanting to buy. They're just waiting and seeing. So in this period of waiting and seeing, this is where some opportunities are going to trickle out because there are sellers that have got to sell. And if you're able to take action in this kind of uncertain time, you might be rewarded with a good deal. You don't want to be, kind of caught as the last one in that game of musical chairs where, whoop, things are taking off and my opportunity to get a good deal kind of evaporated. So my advice, number one, is if you're thinking about buying sometime in the next 6 months, go get your mortgage pre-approval now. Lock in a good interest rate so that you've got that buying power ready to go for the next 4 months because we're investors. We're not buying emotionally. So if it's not this house, it's that house. If it's not that deal, it's this deal. Good deals are going to keep coming. And you are going to be rewarded with a good deal if you're actually ready to take action when a good deal falls your way. So talk to your mortgage broker. I think KB Mortgages is kicking around. I think I saw the KB logo somewhere in the chat. So guys, give us a little wave. Some of the best mortgage brokers in Canada are here right now. Very exciting to have them. On the call and, get a pre-approval. Even if you don't find a deal you want to buy, if interest rates go up a couple of more times and then you buy, you're like, oh, shoot, I could have locked in the summer at a lower interest rate. So you might as well do it. It's nice to have that ace up your sleeve for when you want to do some investing over the next 6 months as opportunities present themselves. I'm going to put one more little bit of info out there. So if we look at the 1 month change and the 3 month change for all markets, we can see that 3 month change down 3.5%, 1 month change. So over the last 3 months, we're watching a lot of the gains recede. But remember, the 1 year change, everything's up double digits. So even in Vancouver, we're seeing a bit of a backslide. And that's good news for buyers because then you're not buying at the peak. So anybody who is participating in all those bidding wars and frenzies, that's buying at the peak. There's going to be this like chill period after the peak where it's going to make sense to buy in. And then things are going to keep growing again because that's what Vancouver does. If you look at the historic 10-year change, we're averaging like 10 to 15% per year in the lower mainland over 10 years. That's terrific. So, every time there's this decrease in pressure, it's a really nice time to get into the Vancouver market because we know it's going to start marching again. And that, my friends, is what is happening here in Vancouver. We're getting a little bit of relief, creating a window, and strategically just make sure that you are ready to go. Cash is king right now. So you want to have your down payment ready. You want to have your pre-approval ready. And guys, let me know what you think of the Vancouver market. Please toss it in the chat. Let's get a conversation going. I'd love to hear what you guys think about, the Vancouver market and what's happening in there.